Indonesia's $8 billion refinery deal with US. What you need to know. Indonesia is poised to make a multi-billion-dollar bet on its economic future. And the stakes are higher than you think. In a move that could reshape Southeast Asia's industrial landscape, the country plans to ink an $8 billion deal with U.S. engineering giant KBR Inc. to build 17 modular refineries, insiders reveal. But here's where it gets strategic. This isn't just about oil. It's the centerpiece of a broader US-Indonesia trade pact that slashes tariffs from 32% to 19%, promising a 0.5% GDP boost and a flood of American investments. The deal, spearheaded by Indonesia's sovereign wealth fund Danantara, hinges on luring regional factories displaced by U.S. tariffs. Modular refineries, smaller, agile, and cheaper to build, will be key, says the government, enabling quicker production and lower costs. But critics argue they might lack the scalability of traditional plants. U.S. companies are already lining up. Apple and General Electric will gain from relaxed local content rules that once blocked iPhone sales. Remember the 2024 ban? Now, Apple's $300 million investment has unlocked access, but locals worry about compromised domestic manufacturing goals. Other pieces of the $34 billion puzzle include a potential $2 billion blue ammonia project in Louisiana and Boeing's $14.4 billion aircraft deal. Yet questions linger. Will Indonesia's openness to U.S. capital undermine its self-sufficiency push? And can modular refineries truly drive long-term growth? Or are they a stopgap? One thing is clear: Jakarta is betting big. As Minister Erlangga Hartarto puts it, lower tariffs make us a relocation hub. But at what cost? Share your thoughts. Do relaxed rules help or hurt emerging economies? Indonesia's Danantara and KBR Inc. $8 billion EPC deal. A game-changer in US-Indonesia trade. Indonesia's Danantara is set to ink a $8 billion engineering, procurement and construction EPC agreement with U.S. firm KBR Inc., marking a pivotal step in its strategic trade pact with Washington. As reported by Reuters, sources close to the matter and a government presentation shared with media outlets reveal that this deal, uncovered previously, will underpin a $19 billion trade accord between Indonesia and the U.S., which has slashed the U.S. tariff rate from 32% to 19%. The project, unveiled during a private session with Indonesian business leaders on Monday evening, was spearheaded by Economic Minister Erlangga Hartarto, who served as the chief negotiator for the agreement. This collaboration builds on earlier reports highlighting US-Indonesia trade talks, focused on Indonesia's increased imports of American energy, agricultural goods, and commercial aircraft. The presentation also hinted at a $2 billion investment by Indonesian conglomerate Indorama into blue ammonia production in Louisiana, though it emphasized that the project's feasibility depends on securing U.S. tax credits. Meanwhile, President Donald Trump announced that Indonesia will acquire 50 Boeing aircraft as part of a broader $14.4 billion aviation agreement, underscoring the scale of the trade partnership. Danantara, Indonesia's largest sovereign wealth fund and the second largest after the Indonesia Investment Authority, is expected to oversee over $900 billion in assets, positioning it as a key player in the global sovereign fund landscape. The deal is anticipated to complement Singapore's Temasek, which manages $1.5 trillion in assets, and could drive Indonesia's economy toward an 8% growth target. While the $34 billion potential transaction volume is a significant milestone, the specifics of the EPC agreement remain shrouded in detail. Critics may question the long-term viability of the $2 billion blue ammonia investment, while supporters argue it aligns with Indonesia's goal of diversifying its energy sector. The inclusion of Boeing aircraft in the trade deal further sparks debate about the balance between defense contracts and economic partnerships. As the world watches this evolving dynamic, the question remains: will this deal redefine Southeast Asia's role in global trade, or will it become a flashpoint for geopolitical tensions? The answer likely hinges on how stakeholders navigate the complexities of cross-border cooperation, tax incentives, and regional alliances.